Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 28th of June. Starting off with the FTSE 100, which is rather miraculously managed to hold the floor of that rising trend channel there from the turn of the year. The nominal level there around 81.80, risk of 81.10, which was basically May and June support. And end of day close above the 50-day line now at 82.30. Could take us back to 8300, but we're not expecting much more than that given the political lay of the land. But at least we are within that trend channel, and we have that rising, sharply rising 50-day moving average. Moving along to the DAX, and here also bouncing off the floor of that rising trend channel, in this case from back in September. Just need to see an end of day close through the 50-day line, which is rising again, 18,300. RSI right on 50 as well, so it looks as though today could be the day, if we're lucky, for this market to break through. There is a line of resistance there from last month through 18,700, so that's the first target if we get through the 50-day line. Onto the Dow, and here managing to bounce above a rising 50-day line, not having to touch it, which is a bullish sign. We've got resistance there, 39,600 roughly, but looking for 40,000 while we're above the floor of the rising trend channel there. 38,600, not expecting anything worse than 38,000 as a nightmare scenario at the moment. RSI at 55, and that's bounced above the neutral 50 level, so that is also a plus, along with the lack of a need to test that 50-day moving average. The sick market at the moment is Bitcoin, and here trying to rehabilitate itself between recent resistance around 63,000 and the 200-day line, 58,000, hoping that we can get away with no more dips below the 60,000 level, but the longer it takes to get through 63, the greater the chance of a move down to 57 or 58,000, which is the area not only of the 200-day line, but also that March support line projection. RSI has bounced off the oversold area, and as I said the other day, the last time we were actually in oversold territory, that was the start of a big rally, so maybe that might pan out now. Moving on to gold, and here lots of consolidation, and here the good news is that we're finding support at and above the 2300 level. We've factored in that we might have to test 2280 intraday. We've got the 50-day line there around 2260, and also that line of resistance there from back in May. That's the area that needs to be broken really for this market to give us a third test of 2450 and the best levels ever. Moving on to the stocks, and here we've got Avacta to start off with, and here we've hit our 53 pence target, which I don't think anybody else came up with. Took the credit for the bounce from 40 pence, but we've hit that line there, and that means that we're actually entitled to look for a new level to the upside. What that could be is suggested by this upper parallel resistance line there, as high as 63 pence, which would now be the target for the end of next month, and upside valid while we're above the late June, well, the peak the other week, around 49 pence, or in fact 48.5 pence to be precise. So about 48.5, looking for up to 63 there on Avacta, and quite a decent recovery there, especially given the way that the 50-day line is now rising, and as we know, that tends to be a decent trigger when a market has been in an extended bear market. On to Altona, which I don't think anybody looks at apart from me, and here you can see that the chart is, well, we're coming off the bottom of the rather devastating bear run, but the narrowly discounted fundraise, and I think a cornerstone investor as well, or at least a big institutional one, means that we've got a chance of a rise here. Bear trap rebound from below the 1.1 pence level, which was March support, and the longer we stay above that, the greater the chance of move to 2.1 pence on the top of that March channel by the end of next month. It would be nice to see the shares close above the 50-day line at 1.35 today if they can. On to Blackbird, which I resisted looking at yesterday, which was probably a mistake, but we've already broken that falling wedge at 4.1 pence just the other week. Heading for the 50-day line there, just around 4.9, and we can get through the 50-day line for the first time properly since back in February. The target here is around 6.3 pence, not only the top of that triangle from March, but also the area of the 200-day moving average, only back below 4.1, really suggesting that this is a false dawn for the shares. A stock that I think I looked at yesterday, which I think one or two people are making positive noises on Twitter in terms of, is Celsius. And here we're looking for the run up to a golden cross. So we've already had a gap off the lows, and the 200-day line I think starting to rise as well. So that suggests we could have a golden cross for the share sometime next month. The normal situation is that the run up to a golden cross tends to be the strongest part of the cycle. That means we're looking for 0.85 initially, and up to 1.1 pence by the end of next month, partially filling that massive gap down that we had back in August. Stock that I've never looked at, and I'm not sure anybody else has heard of either, is Celtic, but just looking at it for the sake of completeness, we had an unfilled gap to the upside through the 200-day line back in February. It's obviously a slow motion type of stock here, but as I said, for the sake of completeness, top of the channel there, looking at £2.10, which we could hit by the end of next month, while we remain above the £1.60 area and the floor of the latest gap. So looking good there. A charting win is coming up next in the form of Ethernity Networks. I looked at that a little while ago, looking for the shares to hit that red resistance line there around 1.38 pence. The peak so far 1.325, and we've obviously come back from that. But the more we can stay above the 200-day line at 1.04, the greater the chance of a retest of that 1.4 pence area by the end of next month. But the gap through the 50-day moving average are positive, and that does suggest that hopefully after lots of trying, we haven't been above the 200-day line properly since the end of 2021, we will actually have a trend change in Ethernity, and the bulls will finally have their day in the sun. Upside value while we're above the recent June resistance around 0.88, so that's something to bear in mind. On to Eurasia, which pulled the rug from under the bulls after pulling the rug from under the bears yesterday as well. The peak yesterday towards 4 pence, and current situation is that this is our 8th rebound off the 200-day line, which is amazing. We're expecting the the 6 tests that we had back earlier this month to be it, but audit issues have changed that. But it is interesting that while there's no end-of-day close back below the 200-day line at 1.9 pence now, there is still the chance of a flurry to the upside. Obviously, the stock suspension audit situation and the bears pummeling it again, notwithstanding. Moving on to golden metal, which is in a good place at the moment, just pushing to new highs. Here, obviously, the shares floated, I think, around 8.5 pence last year, and have done remarkably well. The top of the wider channel there, up to 32 pence, and we're looking for that by the end of next month, or even sooner, the way things are going, maybe hopefully in the first part of July, and then we can upgrade the upside again. Amazing that we've got to new highs without needing the non-dilutive government funding that is one of the flagship points about golden metal. On to Insig AI, and here the picture perhaps not quite as exciting yet, but we've had a decent key reversal to the upside on Wednesday, and we pushed through the 200-day line again. The initial target here was already hit around the 19 pence area, but if we can get through 19, then the big price here is up to 30 pence by the end of next month, and the top of that broadening triangle from August last year. Good to see Kendrick make further progress here. What a great month it's been for the shares. They've basically more than tripled, which is pretty decent for a Colin Bird stock. The current situation is that above the previous target, which was the second target there at 0.97, we're looking for as high as 1.45 by the end of next month, and that was obviously take the shares back to where they were, or higher than they were back in May last year. So a big move, and I think on no news as well. Mobile Tornadoes next, which we've been keeping an eye on for the second burst after the massive rally that the shares had in May. Current situation is we've got a mini cup and handle, and all we need to do is get an end of day close through the recent peak, which was 1.96, I believe, or 1.95. So above 1.95, looking for at least a retest of the resistance on the way down there, 2 3/4 pence by the end of next month, or hopefully much sooner than that. The fact that we've bounced without having to hit the 50-day line, a bit like the Dow, is a big positive point on a technical basis. Next up is Mosman, and here you can see that we found support basically near the old September resistance. That was 0.36, 0.37. In fact, we found support just above that. But the retracement not too bad in terms of wrong footing the bulls. We've also had a bounce for the RSI above RSI 50 as well, which is a positive. So looking for a retest of June resistance around 0.57 early in July, and then up to as high as 0.69 by the end of next month. The key here, I suppose, is obviously remaining above the mid-30s on that situation. Less high-profile situation is TrackMate, and here the reason for the inclusion is that we've gapped off the lows after a double bottom there at 7.4 pence or 7.5 pence, let's say, closing above or breaking above the 50-day line. So looking for the shares to at least get up to 11 pence on the top of that falling trend channel from back in November. But the key here is that we gapped down back in March and gapped up now, and so therefore it's a bear trap island reversal, which tends to be one of the strongest signals because it's wrong-footed the bears on a situation. Upland is next, and here picture looks as though we may finally be finding the floor of a rising September trend channel around 2.65. Above that, initially the 50 and 200-day lines at 3.25 pence is the target, and obviously looking for the shares to return to the top of the range at 4.8 pence by the end of next month, or maybe a bit longer than that, but let's say by the end of the next month. But we don't really want to see any sustained price action here back below 2.5 pence, whatever happens. ValiRx is next, which has been not for widows and orphans or anybody else actually in the recent past, but having another go at breaking the 50-day moving average. Nice candle yesterday, nice candle today so far, opening at the low, closing at the high, and looking for the shares to hit a rather unlikely and punchy target at 4.8 pence by the end of next month. But I suppose, to be fair, when the shares move, they can really move. So that 50-day line there at 2.9, well worth keeping an eye on an end-of-day close basis. Finishing off with Zephyr, which has had a much better year than it had this year than it had last year, and hoping for an end-of-day close above the 50-day line at 5.1 pence. We've already gapped up today, and that suggests that we have enough gas in the tank now to head up towards the 6.5 pence. So the next target there we've got on the screen, and that is the upper parallel of the previous two targets. One was 3.6 and the next around 5.1. So longer we're above 5.1, the greater the chance of 6.5 pence by the end of next month. That's it from me today. More updates over the weekend.